About some serious buying. Signed contracts to buy existing homes increased 8.1% month over month in August versus the 1.4 increase analysts were expecting. Big beat on this number. And it's interesting because August this number follows 2 months of declines that we had seen for this particular read on the economy. Redfin is a tech-powered real estate company and is the country's #1 most visited brokerage website, representing 100 markets throughout the United States and Canada. And we've got Redfin CEO Glenn Kelman with us now. Glenn, it's great to have you here.
Thanks for having me.
First, I want to get your reaction to this blockbuster number that we got on home sales today. Talk about a reversal of fortune. What do you think was behind the numbers, especially for the month of August? What changed?
It's easier to put deals together. It has been really hard for buyers to win deals. The bidding wars were absolutely crazy before Memorial Day. Many people took a step back. Now I think people see the writing on the wall that the Fed may raise interest rates over time. And so the window to get into a house is short, and suddenly prices have become somewhat more attractive. So finally, we've got sales coming back up because people can actually buy the home.
Well, I'm getting asked that a lot right now, Glenn, with regards to real estate is when are interest rates going to start to go up? My best guess is we're going to see them start to slightly tick up by the end of the year. But come spring, which is going to be obviously the big spring buying season, it seems like we're going to definitely see them kind of maybe inch closer to 4%. Any insight from you?
4% would be a strong increase. I would expect one about half that, but that can still have a significant effect on the housing market. If you look at the back half of 2018, when rates increased by about half a point, it was a major downturn in housing. And so I don't think the effect will be that strong this time because it will be more gradual, but it will have an impact. And so I think consumers are starting to react now. They want to get a house while rates are still around 3%.
Yeah, we're at 3.1% right now. I look at that 30-year every week, obviously. One question here, though, is it's not just the interest rate that you're going to pay, it's also the price of the home. And what we've seen in particular with home prices is, especially in July, there was like a 20% jump for home prices. So, and then you bring up the bidding war issue, which is definitely still happening in parts of the country, not all. Do you think that prices are going to level out now?
They're starting to. So we saw price increases year on year of 25% earlier in the summer, and now it's down to about 12 or 13%. So there has definitely been some moderation. We've also seen people just say, what have I done after they buy a house? Sometimes a house is bought and then immediately relisted because the buyer had second thoughts. And so when prices were increasing that fast, late spring, early summer, it was just too much of a roller coaster ride for everyone, including me. But now that they've settled down some, I think more people are willing to play the game. More people are willing to tour houses and buy houses. And it's actually gotten easier for us to do our jobs, which is to put buyers and sellers together.
Did you buy a house? Is that what you're saying? Did you buy something?
No way! Look at my house. It's beautiful.
Okay.
No, I need another place for.
I'm just asking. Okay, just curious. I couldn't help myself. Okay, let's talk about the way that people are actually, and this is your business. This is your website. The way that people are actually buying. A lot of it is sight unseen. Obviously with Zoom and virtual tours becoming kind of the COVID staple, it seems like that's still happening, which helps.
It is. There was really an agreement between buyers and sellers. The seller doesn't want somebody walking through the house if that person isn't serious. So for the first time last year, we saw people agreeing on terms and then actually seeing the property in person. So we saw a tenfold increase in virtual touring. We saw more 3D scans where you can walk through the house like it's a Google Street View, except you're inside the bathroom. People are much more willing to do that, and some of it was about COVID risk, but now it's more about the fact that people are moving across the country, and so they're not going to take a flight just to see a house and then realize before they even walk in the door that it doesn't have curb appeal. So more and more we are putting deals together based on online information, and then when we get to the inspection, we actually decide, okay, what are we really going to pay for this house? And I think sometimes it gets so crazy that people have to make a commitment based on all this virtual information, and there's no way out downstream. But market is starting to moderate a little bit, giving people a little more flexibility once they've actually seen the place.
I like that you say that. Yeah, I'm sorry. I like that you say that there's, because that is a concern. You're right. You buy something over Zoom and then you get there and it's not at all what you pictured it would be. Real quick, there has been some strength. You mentioned people moving because of COVID in the South and the Midwest. We all know that real estate is local. Where are the hot markets that you're seeing in particular in the South and Midwest right now? And if you could give me a couple of places, and also why?
Oh, sure. Miami, Austin, Sacramento, Phoenix. I think part of it is that people just love warm weather. Yeah. Part of it is those places are more affordable. And then with tax reform, there are so many economic incentives for people to move out of California and New York. So the two cities that are losing the most people are San Francisco and New York City. Relocation has come down just a little, but mostly it's still crazy. It used to be that most of our business came moving people across town, and now almost all of it is moving people across country. They're doing it because they can work wherever they want, and they're doing it because they can find a lower cost of living. Often you have one person in a family deciding, I can stay at home if we live in Ohio instead of LA.
Yeah, I know. Everything has completely changed, but it's still a great topic and a fun topic to talk about. Glenn Kelman, the CEO of Redfin. Glenn, thank you very much.
Thanks for having me.